Today we're going to talk about that confusing world of risk and return and how you can use it to increase the value of your business. So let's dive into it. Welcome to the Happy Dealmaker channel. I'm Scott Duke. On this channel, we empower entrepreneurs to build companies that are sellable. If that's something that could be useful to you, don't forget, we drop a video Tuesday and Thursday every week, so like and subscribe. All right, if you're following me along in this Maximizing Value series, you'll know that we're in the pre-valuation stage, and today we're going to be talking about risk. All right, I'm gonna try and do the best job I possibly can. This has taken me a while to get my head around this personally, so hopefully I can do a good job by just drawing this out. Okay, so on our x-axis here, this is risk. Okay, and then this axis here, upper part is return. This is interesting drawing. Okay, return, and this is the price that an investor is willing to pay for a particular asset. Okay, so sorry, my risk is getting cut off just a tiny bit. Okay, so as our risk increases, and we can just give it some arbitrary numbers, we'll say right here our risk is absolutely 0, and then 5, 10, 20, 30, 40, okay? Doesn't matter, it's just kind of like an arbitrary scale. And then our return that we're gonna get for incurring these levels of risk are 1%. Let's make this 5%, should almost use a thinner pen. 10%, 20%, 40, and let's say 60%. Okay, so as you guys know, we'll do the top of the graph. This is like everybody knows this, right? So as the riskiness of any particular endeavor that you're going to undertake goes up, investors want that to be offset by the return they're generating. So basically, this looks like this, right? Okay, so if I'm going to incur whatever 40 units of risk, then I'm going to want to be compensated by a 60% return, right? So one thing to just take away from this is generally this swath right here, this band, call it, between 20% and that 50% right here. This is small business. This is where we live and where we operate. And maybe I'll dive into this more in a future video, because people will often say to me, oh, someone could buy my small business and they can easily get themselves, a 15% return. It's way better than the stock market, but it's so much more risky. So, and by the way, like, investors of small business are not looking for anything to buy anything unless they're going to get at minimum a 20% return. Like, that's the absolute low. But really what they're looking for is, to get their money back in 3 years, like a 30% or a 45% return, somewhere around there. But this is kind of where we live. So that part of the chart, like, you guys know that the more the risk goes up, the higher the return the investor is looking for. Now, what I'm trying to expose in this video is that there's another part of this chart that never really shows up. And this is like the price, or at least sellers, even myself as a business owner, when I was, selling my first company, I didn't really think about this from the price perspective. And let me give myself some space here. So, guess we still be seeing, yeah, price. Okay, so we'll start here at 0, and then, I don't know, whatever, maybe in the middle of this we make 500K, and then $1 million, 2 million. Again, really we just have to understand that the price as we drop down here is going up, like what an investor is willing to pay, right? So they're going to be willing to pay as the highest amount when the risk is the lowest, okay? So if the maximum amount we could sell this particular company for, in the best case scenario, like everything is perfect, which is reduce the risk down to practically 0, an investor is going to be willing to pay, that max amount of 2 million. And then as the riskiness goes up, the price that they're willing to pay drops until, when the risk gets so high, the price literally drops down to 0. All right. An investor is not willing to purchase this company because the risk is so incredibly high. And I mean, now this kind of looks like, I don't know, 2 water skis or something like that. But really, this is what the chart looks like when you look at the other side of the equation, right? Like this is, you know, the investor's gonna take on a lot of risk, so they're expecting a lot of return. But what's that doing to our price? Like as that return that they're expecting is going up, it's slowly reducing and devaluing our company, what an investor is willing to pay. All right. Anyhow, I'm sure I could have done a better job of drawing this out, but the takeaway is, as the riskiness of your company goes up, investors are expecting higher returns, which is doing to your price is dropping it down to practically zero, right? So our job as, you know, small business owners is to, by the way we design our companies, by how we set our contracts up, by the systems we put in place, by the dependency it has on suppliers or owners, by the terms and conditions of training and transition, everything that we're doing and that we're, you know, how we set up our marketing material, how we show them that there's like capacity in the future, all of this stuff is designed to reduce the perceived risk for a potential buyer. Because what I want is I want that risk from when the buyer looks at it to be like, holy, this risk is like so extremely low. It's almost just like investing into a GIC. And what that does is it drives my price way up because the investor is comfortable taking less of a return on that investment because it's more secure. Okay. Anyhow, I'll do future videos that'll show you guys exactly how you can drop your risk, because there's about 45 different ways that you could within a company. There's 8 majors. And then those majors kind of break down. There's like 45 subcategories of areas that you can scrutinize your company when it comes to risk. And every single one of those little pieces that you can fix, improve, eliminate, remove from a risk perspective, all it does is increase your value. Because at the end of the day, actually, I'll go back to the whiteboard. The end of the day, really, when we're talking about company value, is an investor's looking at the risk, okay? They're comparing that against the returns that they're gonna generate. And that's giving them the value, right? This is like at the most basic level equation for calculating the value of your company. And everyone forgets that the risk is such a massive component of it, right? And risk, by the way, like when you look at it from a company purchase perspective, is shown as a multiple. All right, so when people say, all right, I'm gonna sell my company for 3 times, or I'm gonna sell it for 7 times, so that's what they got when their company sold, that's somebody looking at it and saying, okay, I'm willing to pay. The risk is embedded within that, by the way, right? So, okay, anyway, I mean, that's kind of getting outside of the scope of this video. All I want for you to take away from this video, because it's extremely important, is that as the riskiness of your business goes up in the mind of the buyer, that they perceive it more risky, as that risk goes up, the value of your company is dramatically eroding. So for us, we want to go, okay, how can we reduce that risk? Because that is then going to push up and increase the value of our company. All right, this one got a little bit deeper maybe than my average one, and it's definitely less exciting for sure, because I had a chart and you're kind of getting into a bit into math. But anyhow, if you want, and if you're watching this video and go, okay, I want to know those 45 things, like toss it in the chat. And after I finish this series that I'm doing on increasing value, maybe that'll be the next video that I do. It'll kind of bump it up the line of videos that I should do on a Tuesday or Thursday. Okay, this is the Happy Dealmaker channel. Hope you guys enjoyed this content. If this is helping you out in any way in preparing your company to sell or increase the value of your company on that road as you're building it, then don't forget, like, subscribe. We'll see you in the next video. And remember, every business is sellable.